Welcome to TradeTheMBI.com. This is John. This report is for the 4th of June. Amateurs continue to be fooled by this market, as well as many professionals, not anticipating this continued rise, but we've talked about the reasons. It's probably going to gyrate some more back and forth through here. We do get a strong break above the zero line of the red DOC. That becomes critical because I would expect more weakness if you see a turnaround back below it. If this trend is going to continue itself. We've had strong shakeout. We're now up over the warning line at 15, and having produced a positive extreme on a daily, we would expect that's got to get filled back in. Will it happen right away? We'll see. I expected that we would pop up there, and I mentioned to you we would come right back in these swing ranges as it fills back into just meet the support levels as we continue to redefine them. And this is continuation of what the buy programs will do as they have the supports and you have the continued Fed action. It's not going to change anything. NASDAQ as well, getting up to peak. It's produced a strong DOC spread right here, but with steel completely reset, at least from a reasonable level. Typically for a full reset, I would like to see it dip below that 7.5 and come back up. Those usually produce your stronger pump actions, which means we're more likely to get just soft consolidation as the ABM catches up to price action. From a euro standpoint, of course, this rise has been mediocre, like a meteor. I almost thought of mediocre, but this is a pretty strong move from a currency standpoint, and that's just because Europe has reopened completely from its utter closed status, but more importantly, you have that devaluation of the dollar set up, and the Fed would like to see the euro at least probably closer to the upside of the range just to promote exports. And from an oil standpoint, we're kind of holding off right here, which is good because if we get towards that 50, it becomes a little bit more problematic from a macro standpoint, economics-wise, as far as inflationary pressures go. This is enough to help stabilize. There are some producers that can still make a profit at this level without being completely decimated, though you're still going to see production ramp up, and we'll see in the next weeks or so with Europe moving and some of the other places around the world starting to get active. Will that glut that has decimated the market start to get absorbed? And of course, the U.S. has helped with that by filling up their reserves. From a gold standpoint, bit of a sell-off from there, filling in this dip below the red line, right at 76% line. Shaking out any weak hands. This was a pretty clean rejection here from the near meeting of cyan and green, and just opened lower. And that's going to happen when you don't have that inflationary push. We thought that we would maintain this range for a little while until there's some catalyst that suggests that you're ready for a breakout. And that catalyst, I think, would be oil moving in a strong direction, because that is going to represent to the market that inflationary pressures with all this liquidity pump are going to start to have an impact. So, powerful day. We just started off to the upside and continued that way. And it was interesting because we had a continually declining DOC red as price was just maintaining itself throughout the whole run. And then so as soon as turnaround happened from the DOC breakout further to the upside, and that just continued throughout the day. And you can see from a power mo standpoint, you didn't get any crossover in a short signaling standpoint until almost right about here, and that immediately flipped around. That was the probably biggest decline dip right there from the peak, and right after that, boom, crossover upside, a pretty decent magenta move over there, and that just led to new highs and a continuation all the way through. We had a couple of little fillbacks going into there, and we're well over the 3075 we had marked. A couple other extremes or dips below the red line we could probably start marking in between here. I would expect we're going to fill back some of this stuff just to get back to that level again. But Beautiful move. 31.29 back down to the 31.01 here in the pre-market. As things have just, you just let the bubble pop a little bit, eases off that pressure, fills in some of it, and start all over again, and we'll just rinse and repeat. And this is what I said we would be doing, back and forth. But these are still fantastic ranges. I mean, that's a 30-point move from the highs at the end of the day all the way down to where we're at right now. So it's just good stuff. So just keep enjoying that, and we'll just follow it as it comes, and that's all you can do with this. It's just going to be some nice midterm action with still a bent upward bias, just from the devaluation standpoint. But as always, we'll be looking for new data, and anything that pops up, I will let you know. As always, trade well. We'll talk to you later.